What effect will the election have on Bay Area real estate? The answer will surprise you. I'm Brett Jennings from Real Estate Experts and the Silicon Valley Real Estate Journal, and we're going to talk about that and more in our summer market update and forecast. The question we often get is, how is the market? Well, year to date, our market continues to be steady in spite of some of the economic headwinds we've had with inflation and, most importantly, political uncertainty. Now, in order to understand why our market has been steady and resilient, it's important to understand the big picture of Bay Area real estate. And what you're looking at here is the last 40 years of real estate prices and their increases over or in and around the Bay Area. Now, one of the things that we enjoy here in the Bay Area, we like to call it the Garden of Eden of real estate, because we have seen 50% price appreciation every 5 years and 100% every 10. It is exactly double the national average of appreciation for other markets across the country. Most places around the country, their 40-year average is about 3.8%. Ours, you can see, is this nice upward trend there, is actually 7.66% is our annual average over the last 40 years. Now, why do we see double the appreciation? It's pretty simple. We consistently have half of the amount of supply as other parts of the country. Half the supply, double the amount of price increase. So where are we today? How are we tracking? Well, year to date, home prices are up 3.9% since January. Now, to remind you, I said our average appreciation, 7.6%. Half of that is 3.85. We are right on track for where we should be with our average annual appreciation. So what is it that's continuing to drive prices higher in the face of increased interest rates and a little bit of political uncertainty? Well, it's best for me to explain this, and I like to keep it really simple by saying real estate, like any other market, is a supply and demand driven market that's influenced or tempered by interest rates and our stock market. So let's take a look what's happening and what's going on driving prices behind this. When we look at supply, this is looking at the last 5 years of Bay Area real estate, and you can see what's happened with supply. It's consistently gone down, 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 down. We saw a little bit of an increase this year, but it is still below our historical averages. Well, where's it going? Part of that it is going to be taking a look at demand. So supply is down, increasing slightly, but what's happening with demand? Well, it's all a function of how many people are moving into or out of the Bay Area. And this is a quote from Silicon Valley Index, who tracks migration, the economy, everything that's happening. And they said net migration in Santa Clara and San Mateo counties was positive, meaning the number of people moving in exceeded the number of people moving out for the first time in 8 years, with a net migration of 1,800 families in the last year. So that's good, but what does that mean in relation to new housing that's being created? Well, this graph here shows the number or amount of new home permits being issued in the Bay Area. And what you see the red arrow pointing there to is the number of single family home permits. So although 1,800 families moved into the Bay Area, most people are moving into the Bay Area for jobs, only 500 new home permits were issued. The rest of those housing permits, the light colored purple lines you see there, are for multifamily apartments. Okay, so we still have low supply. We have more demand based on the number of people moving here and our chronically low supply that we've had. Now, other factors we talked about are interest rates in the stock market. What's happening with the stock market? Well, here's an interesting fact to consider. 62% of the value of the NASDAQ exchange is located within 20 miles of Mountain View. And the NASDAQ has been on a tear this year. Since November, it's up 43%. If we look back 18 months, it's up over 70%. And if you happen to work for one of these high-flying AI companies like NVIDIA, just this year alone, your stock would be up 175%. So seeing that the majority of the home buyers work in technology in and around the Bay Area, many of them are feeling confident and flush with cash, meaning their pockets are full and they're ready to put more money down on houses And that's what's continued to drive prices up in the face of higher interest rates. So this is looking at the NASDAQ index just since November. As I mentioned, it's up 77%. So what's happening with interest rates? Well, here is the question is, where are rates headed? Here is the forecast looking from the perspective of three of the major mortgage forecasting outlets. One is Fannie Mae. Second is the Mortgage Bankers Association. The third is the National Association of Realtors. Today, you can get a 30-year fixed jumbo loan right around 6.5%. If you get a traditional 30-year, it's around 6.75. The forecast, as you can see, from this quarter going into next quarter and into next year is a general trend down. The good news is these analysts, after looking at all the economic data, they are forecasting there's a 60% chance that the Fed will make a rate cut in September. They've held rates steady for about the last few meetings, and it does look like it is time for the Fed to make a rate cut. Well, what do we know will happen when rates drop? Experience tells us from decades of market data that when rates go down, money becomes more affordable, the monthly payment goes down for people, and it pushes prices up. So that's what we could see happening with rates. What about the election, though? I opened this conversation by saying we were considering that the election could have an impact on prices, and what will it be? Well, this is an interesting fact. Looking at the last 8 presidential elections, going all the way back to 1989, the market data shows us that in election years, prices actually go up. And in fact, they have gone up every year after the election as well, except for the one year you see there as the orange bar, and that was 2009. That was in the year following the Great Crash, when Bear Stearns collapsed and the whole economic system went under. That was the only time we saw home prices decrease the year after election. So experience tells us strong likelihood we will continue to see prices increase this year and into next year. So answering this question of where is the market headed? Well, here's our forecast for this summer. Rates will likely drift down as inflation seems to be calming and trending down. Demand for homes will be steady because the job market is good and the NASDAQ is doing amazingly well, filling those buyers out there with cash in their pockets for down payments on these homes. Supply will increase modestly. We're not going to see a huge increase in supply as more sellers begin to list. They realize, hey, if we're going to make a move, rates aren't, in the 4% or 5% where we'd love them to be, but we've got to make a move and we're just going to bite the bullet and do that. That's what we're seeing. And lastly, prices. Prices will rise another 3 to 4%. We're forecasting just as we do with our 40-year average, because demand is and will continue to exceed supply. So what does this mean for you if you are a buyer or a seller? Well, the most frequent question we get is, should we wait for rates to come down or the election before we buy? Well, before we answer that question directly, I want to explain to you what happens when rates go down. When rates go down, demand increases because buyers now have lower monthly payments that they're looking at. They can qualify for more and they jump in. Supply goes down because there's more buyers entering the market, buying up those homes. The third thing that happens is prices rise because demand is exceeding supply and buyers are competing, and you will face multiple offers typically following a rate cut. But I want to urge you, if you've been waiting, here's another reason why now might be a good time to keep searching. Last year, this graph is telling us last year in the fall, 3 out of 4 buyers stopped their search or put their search on hold. The top 4 reasons why buyers paused their search was they felt that mortgage rates were too high, they couldn't find home prices in their range, or they were competing with too many offers, or they simply couldn't find the right home, so they just decided to wait until next year. So the question is, should you wait? Well, let me ask you a question. Would it be easier to buy now when there is actually some more inventory on the market, there's more selection, there's less competition at the moment because rates haven't come down substantially yet? So would it be Easier to buy now when there's more selection and less competition, and then simply refinance to a lower interest rate when you're already moved into that new home when rates go down? Or would it be easier to wait for rates to come down, maybe at the end of the year, and get back in the market when the election is passed? Buyers are back, competition is fierce, and prices are higher. What's better for you? Well, our expert advice is if you are considering buying, buy now before the coming frenzy after rates come down and the election is behind us, because it's going to be easier to do that. One narrative we're seeing in the industry is for people who've been in it a long time. They said, you know what, this feels a lot like 1995. In 1995, we had just come out of a recession. Rates had come down from 12% down to 8%. And the economy was just starting to turn around. And looking at our 40-year chart, this is what happened after 1995. We entered a 7-year run where prices increased 100% over 7 years. Now, I don't have a crystal ball, but what we can say is the conditions that we're facing now are very similar to what we experienced in 1995. Now, if you'd like to explore your individual situation and circumstances to determine if making a move now or later is best for you, please get back to the person who shared this market update with you, and they can help you make that decision. Until we talk again, this is Brett Jennings saying we'll be right here, ready to help you create a better life through real estate. Have a great one.